Welcome to Trading Lounge and the daily US stocks for Thursday the 6th of January, and starting with Amazon here on the daily chart. It looks like we've just started to break through here, which is on track. So let's just go into the intraday. We're still expecting it to move down much lower, and as I mentioned before, we're going to have a bit of a bumpy ride when we go through minor group 1 here of 10, 20 and 30. Let's go to the 100 tick chart. And yesterday we were looking at having this as the W here with an ABC for the X here, and down for wave 1 in here, back for wave 2, and then moving down into wave 3 here. Just clean this up a little bit. Still hasn't really, it's just poked through. It hasn't, it's put the hole in the paper bag, so to speak, and it should continue to move lower now for that. But yeah, look, as I mentioned, we'll be expecting a bit of a bumpy ride with this, but the main point is that the direction is lower. Alrighty, let's move on to Google Alphabet here. This is a daily chart here. We looked at a bit of a robo switch setup yesterday to short this down, and it's moved down quite nicely now. Let's go into the intraday and 100 ticks and check on that. First of all, just go back here for a moment. When we're using the robo method on a daily bar like this here, the first thing we do is keep the stop above. I mean, when that was triggered here, we would have had the stop here, and now we can bring the stop down to here, and I'll just pop that in there now that that's been triggered. And we'll leave that there. We have to wait for the next bar to come in. You can look on our website to look at the switch setup and the robo method. Rightio, where were we? Going into the 100 ticks. So we're looking at this wave 3 to the downside now. That was the 61.8% support from here to here, so we don't need that. We can move this on down here further. Clean these up. So I would imagine just viewing this, eyeballing it without going into another smaller version here, we'll be looking for something like this, and then we'll be looking for an ABC correction back up here, and we can look at that by taking the top here and the low here and looking at it like this, and then having the next leg down for that. So I think in terms of our trade, we'll try to move lower through here. Now the 2800 is the top of minor group 1, it's minor level 8, and yeah, it always carries a lot of weight. 8 is the third strongest number, 1, 5, 8 and then 3. So yeah, it's got to do a little dance here before moving down, and that will display as a wave 4 and also probably an internal structure as well, but this is where we're looking here, so something of that nature. So all good. So yeah, this is all a group 2, so 65, 72 and 80. So getting down to this level here, the 2720 will be a target area if you wanted to move out or take some money off the table. Otherwise we'll just wait till we get stopped out. That's normally the robo method. So let's cruise on to the next one, and that's Apple. Now we can expect this to move on lower here as well. So I've had this as wave 1 here, and we can have it back for wave 2 here, and looking for a little ABC in there, and then moving up. Now the other point is that we've got wave 3 here and wave 4 here, and we could, bit short, but it's okay, we could bring wave 5 here, that's what that 3 is, and then this down to here. So we're either going to have 1, 2, 3, 4, 5 to finish this off, or we're going to have this. If this is the case, well, then we're going to pull down deeper into this. So let's just have a little look on the intraday on the 100 ticks. As we looked yesterday, we were looking for further downside here. So I won't label this, but 1, 2, 3, 4, see, 1 and 2 and 1 and 2 and 3 and 4 and 5. So we're still looking for this to finish off here, but there will be a rally. It probably won't come back much above this here, but it will be in 3 waves, and then we'll see another move to the downside here. So we're still continuing to the downside. Just got to be careful of these rallies. It may not occur just yet, may even be further down here, but definitely we're going lower for Apple, and I'll cruise on to Square. Well, as you know, we've always been bearish on this, and as I mentioned yesterday, we'll probably see a bit of a dance across the 150 as well. I haven't looked at this morning, but let's go in and just rearrange a few things, I guess. So yeah, we can put wave 4 there, wave 3 here. We're into wave 5 here, probably wave 1 and 2 here, and 3 and 4 here, 1, 2, 3, 4, 5. So that will finish off down here somewhere. And then that will be wave 3, that will be wave 4. We'll see a retest of that, and then down for wave 5. For 3, that may be a tad lower there, and wave 4 can be over here. That kind of thing. We'll just keep adjusting it because it's just the way the cookie crumbles. Yeah. So we can expect it to come down to 130, which I think in memory is the 61.8% retracement level at that point there as well. So yeah, a good short trade. You'd have to leave the stop above this wave 4, because technically speaking, all the wave 4s can line up here for this. But I tend to find that they all move slightly lower in the bearish side there. But we'll see. We'll see how the market wants to stick to this large sticky number. Alrighty. Meta platforms. So we're expecting that to come down. It is coming down. It's got a fair way to come down by the looks of it. There will be this move here is in 3 waves. It will be confirmed that it is 3 waves once it takes out that low there. And once it takes out that low, it confirms that that move is 3 waves. And then we've got the good possibility of taking this low out here, and the 38.2% retracement level is down here. So quite a bearish move in that case. Let's just go to the intraday on this. So from the top here, we've got 1 and 2 and 3 and 4, and then I was looking down for 5 here. So we've got wave 1 here and 2 here, and there's a couple of ways I can rearrange all of this in here, but one of the main points is that we've probably got the low in here for this. Anyway, we're expecting this. Look, we don't have a short position in here, but we will once we get this this ABC pattern here. Okay, I'll need to study this a little bit further. That's got 5 waves in it. That's got 5. Anyway, this is the one we'll look to short. Okay, it may go this high, so I'll just leave this over here. But this will be a short trade setup on this side. I'll just double check this on the tick chart, on the 5 tick chart. We need to bring in a bit more data. So that's 5 waves, because I would have pulled that apart. That starts from there though. 1 and 2 here, and 3 and 4, and 1, 2, 3, 4, 5 for 1, ABC for 2, 1, 2, 3, 4, 5. So it's probably a 1 and 2 in here. I mean, this is a 1 and 2 and a 1 and 2 and a 3. So 1, 2, 3, 4, 5. So yeah, it's probably a little bit more to play out here before we get to that low, you know. But it's this particular correction that we're looking, rally here, that we can use across the 330 as the next short trade to the downside, and that will be a 3rd wave coming down, so that will be good to catch. So just coming back to the 100 area here for a moment. So it's so we've got a little bit more to play out here for this. So there's a couple of other ways I could look at this as well, but it doesn't matter. What we're looking for is this ABC for wave 2 here to play out, and then we can look to short this down through here. Okay, so just a little wee while longer to go. We don't want to get sort of caught shorting at the low here. We want the market to rebalance, and then we'll pick up the balance point and surf that lower. Alrighty, moving on to Tesla. So with Tesla, we thought there's a possibility of one more sort of move to the upside, so we've got to take that on board. But otherwise, we're looking for the ABC, as I mentioned yesterday. So let's just go in and work that. I mean, the trade that we'd be looking for here, what I was thinking about was the ABC for 2 here, covering the gap and pulling into here and giving us a setup, and we'll go up into the third wave at that time. It still looks possible that there's a wave 4 over here, and we're looking at all of this here as an A wave here, up here for an ABC for the B wave here, and then down for the C wave. So we need to keep an eye on that configuration as well. So a little bit to do here. But obviously, if you've been long from above 1,000 here, then, it's just, that coming into the old highs, there's going to be issues there, isn't there? So, trading to these levels that we use and taking money off the table is the way to go. So, yeah, it just depends on how you want to trade. Look, it takes courage to stay in a trend. It's not easy. And the reason that you get out is because you've overcommitted yourself. You're over trading. You're putting too much money in there if you can't handle a retracement, So less is more. Okay, let's just cruise in. I mean, I'm not perfect. I'm full of mistakes myself, so I can't sort of boast on, but I've been around since the 80s, so I have a right to speak. So look, my problem here is it's very clear that we've got this 5-wave structure here, not a problem. But then we've got this little dude here, which we could also call that wave 1 and wave 2 here. Well, not really. We could call it an A wave and a B wave, and then 5 waves here for the C wave. So making it bullish corrective. I've just taken it from this top rather than this one because I always go where the most traffic is. So I may have made a mistake in that structure, but we've got, I don't think I need that now. So yesterday we noted that was in 3 waves. So we noted that we're in a correction. So we got this one here, and obviously we've got this one here. So it expanded a bit larger than I thought, but that's okay. It's still a nice ABC correction, and then this working lower down here somewhere. So that's probably a little low in here. There's probably 1, 2, 3, 4, 5 at that point there. So we could probably put that in, and another one here. I'm not sure how far this will go here. There might be. It might be something very simple like this. It might be just an A wave, a B wave, and a C wave here. That's why I've got the green line up here so far. So we could bring that down to here. So if we get a classic trading levels pattern on the midpoint here, which is the midpoint is obviously in the middle, halfway between 100 and 200, and 100 and 200 here, we've got the next degree smaller in the levels. These are minor levels here, 1 and 2, and then we've got the sub levels here, 1, 2, 3, 5, and then 8. So the Fibonacci, we're using the Fibonacci sequence as a price ratio, and these are sub-levels in here, and we can go down to micro levels, but these are minor levels here, and the same thing applies as well, 1, 2, 3, 5, and 8. So it just it's just breaking the price down into Fibonacci sequences. And there's a little bit more to it. With group 2 here, for instance, we put in 65 and 72. And they always play out really nicely. But in terms of trading long here, we would want to see a classic trading levels pattern sitting on here. So this would be the entry point for going long at that stage. So once you see something like that, we always use the top there, set your first buy on stop there, or whatever your order system is, and then if you get a better position, you can come down onto the second low there, and you set it up and you leave it there. And then if the market has got to prove to you that it's strong and take out that high, that's the trigger. And of course the stop would go under the low here, but be careful where you put the stop. See, in that case there, the numbers end at 39, so you don't put a stop on 40 and you don't put a stop on 39, because if the market's going to test 40 again, a market maker or the thing may take you out at 39, and then you got 38. So 8's the third strongest number, so that's where all the orders are going to build up. So you don't put a stop at the 8. So you can go at 7, but always at 7 you get away with it a fair bit, but you need to know what you're doing a little bit. So 6 is always the number to go with on the long side. So the two numbers that should end, in this case it's got the 9 there. So if I put a long trade in the market, in most cases it will, in 90% of the cases, it will have to end in a 6 or a 2. So 6 in this particular instance here, if that was the case, but always 2 and 6 on the long side and 4 and 7 on the short side. Okay, so let's cruise along to the next one, which is Microsoft. So this is all going according to plan as well. So wave 3 here, an A wave, an ABC for the B wave, and 1, 2, and 3, and 4, and 5. So we're looking for this to build down a little further here. So let's cruise into the tick chart here. So we'd count it down from the top here as 1 and 2 and 3 and 4 and 5 here, and then we should have got this 1 and 2 just a bit later. I should put more trades out, but 2 here. So we're going down for wave 3 here. Now I can count between 2 and 3 a little bit differently, but at this stage, yesterday we looked at wave 1 here. We're looking for a rally back into the 330. That's where we were looking for the short trade. So if you're short at the moment, that's okay. Well, it's good. Now this here, I'm pretty happy with this, I suppose, in 1, 2, 3. The wave 3 here looks a little bit shorter than the other one, is it? Or no, it's not. No, it's okay. Well, I'll just double check it. Get my yardstick out. It's not very professional, but what do you do when you're born in the outback? Okay, so yeah, it's just a tad longer. So anyway, I'll just play it out like this. There's a couple of other ways I could look at this, but I won't worry about talking about that right now. The main thing that you've got to watch for if you're shorted it here is this wave 4 here. I do suggest that we should travel through that and hold that. If you don't want to hold that and put your, because in a nutshell, let's just check on this from wave 2 at the top to wherever that may be down here. I'll put it on the 18. That's where it's going to get its first bounce. So that would take us back up here. So that would be, this is the wave 4 of 1 lesser degree, and that's the 38.2% retracement level, which can be adjusted a little bit later on. So the market can pull back to this space here. So if you can't handle that, or you don't want to handle that for whatever reasons, and it doesn't mean fear or anything else, it just means common sense on whatever strategy that you've got, then I would suggest taking some off the table here. Not a lot, 30%, and then that way you can quite easily handle this. And then that 30% can also go back in here as well. It doesn't have to be perfect. You don't have to get it, exactly right. It just takes practice, but that's what we'd be looking at somewhere in this space. And it may not even come up to there. It may just come to here and then do its bounce here and, work lower from that point. If I've made a terrible mistake, well, then it's going to continue to drop here. But if you've just taken 30% out, it's something that you can live with, and then you won't throw stuff at me either. Alrighty, I'm going to leave it at that. So thanks for tuning in. Cheers.